Hello, this is Steve Schwartz with Market Traders University. We're going to be looking at research in motion today. This is a chart of RIMM. I think you all know who they are, and if you don't, they are the BlackBerry company. They developed the BlackBerry wireless platform. They've got other handheld product line, software development tools, radio modems, software, hardware, licensing agreements, you name it. Anything to do with software and handhelds, they are at the cutting edge. Now I know that there's Apple, and Apple has a great product, but today we're going to look at RIMM, that's Research in Motion, and take a look at the overall technical price structure going back over 6 months. So let's take a look. As you can see, the market made an initial low in late November, early December, where then we had a very strong upward climb that was considered a bearish rally, only to disappoint bulls. Bears took control, bringing the market back down. But holding these lows was very important to the market. And basically, the market, when it put in this low and started climbing, once it got past these resistance levels right in here, the market swung into a intermediate bull trend. You even have a little mini reverse head and shoulders in here, and away we went, along with the whole market to speak of. So the market then took off, gapped higher, and then proceeded to climb clear up to the $85 price zone. Well, as we all know, the market's been going through a correction over the last number of weeks through the month of June, and Research in Motion was vulnerable and did not escape that correction in the overall market. So I'm not here to talk about the fundamentals today, but we are going to talk about the basic structure, technical structure and pattern that the market is developing now. And it's very clear that after this high was made, and then the 1, 2, 3, 4, 5, 6 straight trading sessions down, there was clearly managed fund selling, institutional selling, and unwinding of bullish positions in the market. When you see, here's one clue, when you see a knife's edge or a knife fall straight down like this, that is unwinding of institutional money. That is not the public trying to determine a top and unwinding their positions. Ordinarily, the public are more long-term holders, and yet, unfortunately, the public finds out a little late that it possibly there would have been an opportunity to take some profits right in here. But nonetheless, institutional unwinding has taken place, maybe some very strong profit taking. But when you get an uptrend like this and then you see a decisive sell-off over a 1-week period, you know that that is some very strong hands in the market unwinding bullish positions. Today we're going to take a look at the bearish flag pattern. Now these, just to give you a note, this charting system and basic analysis comes to you and is powered by OptionSource.net. My friends over at OptionSource.net and Market Traders University are coming together in a partnering of good solid content to deliver through Market Traders University, and they're going to be an exclusive partner in stocks, options, and E-mini futures, which we'll be covering another time. The bear flag here was nothing more than just a simple 1-week correction to the upside in a breathing episode, or basically consolidation pattern, that essentially broke down below the low it made after that precipitous unwinding, and now the market has broken that low and has now confirmed a downtrend on an intermediate level. First targets have been hit. Basically, the next target will be the 60-50 area. The third target will be 56.80. But really, it's my belief that this market, RIMM, is going to be testing this gap right in here. That empty space is what's called a gap in the chart. And it's my belief the market is in the process of backing, meaning correcting, and filling this price zone somewhere between 47 and 56, 57. And thereby option source in their charting has a target of 56.80. I believe that is probably a very good bet, and even lower into this gapping area. So with that, use it or lose it. The trend has changed, intermediate. It will need to back and fill, then create a higher low, probably in here, where we can create a longer term trend line for the market. This is probably going to take place in the fall, where the summer doldrums are upon us, and we're now in a corrective mode anyway in the stock market. So happy Wednesday, happy hump day. Well, it's actually Thursday, and I wish all of you trading success in the future.